Time now to take us through the chart and an example trade is Tom White, senior options contributor. All right, Tom. So they pulled back a little bit, but still, signal some upside from here. Can you take us through the chart first?
Well, you mentioned the B of A note, but I think what's more telling is the Morgan Stanley note, where they actually, kept their buy rating on the shares and said positive survey data from them moving forward, and they mentioned the amount of market share that they're taking over in China. But we got a one-day chart here in Apple to kind of take a look at. We've seen that volatility over the last several months since hitting those all-time highs above $288 a share. I think one of the key points today, with the stock up above $252 a share, bouncing off of that closing low from Friday, is this 200-day simple moving average just below the 247 level. That's going to be an area of support if we can remain above that level. I think that's really key. We've been descending on the 50-day moving average, but not quite up to that or down to that 200-day simple moving average. So I think there's going to be a key level around that 247 level if that can hold, because Apple's not immune to moves in the overall market, even though maybe the data suggests that everything's going pretty well for Apple. So we got another chart that we can take a look at here, and this is going to have some volume profiles. We've failed through the past couple of months through a couple of those levels, and that's what you have to start taking a look at. Above here, 256 might be an area that you're looking at, right around here, 256. We've fallen below these key levels. You get 262, then 256 is another area of headwinds, and then 273 above that. The next area of potential support, if we do continue to fall, around that 238 to 240 level. So keep an eye on that. And then you look at the momentum side down here with the RSI. This is as of Friday's close. The RSI got down to 34. Anything below 30 is considered oversold. So we didn't hit that, and now you're seeing a nice pop in the stock. So hopefully that 200-day moving average holds and this momentum indicator starts to turn a little bit higher here.
Okay, what's the approach you would take for an example trade, Tom?
Well, I looked at something that kind of a twofold trade, I like to call it. It's a cash secured put where, hey, if the stock doesn't continue to move down or reverse lower, I can still profit if the stock moves higher. It's a passive type of trade, but capital intensive. So I went out to the April monthly options that expire on the 17th, so 25 days to expiration. I just looked at selling an out-of-the-money put. We've got higher implied volatility levels that allows you to collect a lot more option premium on out-of-the-money puts. But I went out to the April 17th, the 240 strike put. So the stock looks like it's going to open up about 252, 253. If I sell that 240 put for a credit of 350, that's what my potential profitability is. So if it just remains above the 240 strike, I get to keep $350 per put that I sell. Now, it takes my break even down here to 236.50 to the downside. That's about 6.5% below where the stock looks like it's going to open up here this morning. So you've got that cushion. Now, I mentioned that it's capital intensive, right? Stock falls below that 240 level, and you're still short those puts. You have that assignment risk on there that would allow you to buy the shares, but you're buying them all the way down at 236.50. So if you're comfortable owning the shares, this type of strategy also takes care of this type of trade. I mentioned the higher implied volatility that allows you to collect more credit on this put. So I mentioned it's a twofold trade. You're either doing this for the higher implied volatility where you think it's going to remain above a specific price point, which is 240, the strike you're selling, or, hey, if the stock does continue to fall, I'm willing to buy it. Now, if you put a bid in for $236.50 on the stock, you might not ever get filled on that. But this strategy allows you to take advantage of that. If, hey, it doesn't go below 240, I still get to profit that $350 per put that I sell on this neutral to bullish cash secured put.